Hi, Kiana. How are you?
Hi Dale, how are you?
God, it's so great to have you. What a wild day we had yesterday, huh?
Absolutely. Did you read my updates not to do anything during?
Yeah, that's great advice. That's wisdom. I believe in reacting to the reaction. So you came in flat and stayed flat through all that craziness yesterday, waiting for things to settle down.
Absolutely. And today I'm actually taking advantage of the after effects.
Okay, and which way is your bias? You think that we're setting up with all this dollar weakness, some type of dollar recovery coming around the corner here?
Well, from what we took away from yesterday's statement was that obviously the growth was moderate. We knew that before, and we were seeing that it is not enough for a rate hike. But
Yeah.
the fact that the Fed did say that the growth is there and it is moderate, that leaves us with a possibility of a rate hike within this year still. Even if it doesn't happen, the economy is obviously growing. So for that matter, yes, I continue to be bullish on the U.S. dollar, and I think right now is kind of a knee jerk after yesterday's statement because people normally that is what happened right after it. People have a negative negative
Yeah.
reaction to it, and then the market just goes ahead and corrects itself. So it
It's
is
all.
actually a good time to go against what the market is doing at the moment.
Yeah, it's almost the same reaction we had on the Fed minutes when they were real dovish about a month ago, and the market started to worry about the economy and sold off, and them not raising rates. Of course, we got that pop in stock indexes that gave way. When you look at the dollar, the recent high in euro has been 117. I think we're approaching about 61.8 back here around 114.60. So you're of the mind that the dollar will reassert itself. Are you in the? Are we just talking about maybe little swing trades, or are you one of those parity bears in Euro USD?
No, I am currently a range trader on USD. I don't think it's going to go above and beyond without a help of a solid rate hike or anything solid positive. Uh,
Okay.
Against most of the majors, if we look at the euro dollar right now, for example, it has been ranging since March, and I believe it is going to continue to range between 115 and, well, 105 is a little bit of a like a little bit of less of a possibility right now because let me see if do you mind if I share my
Oh, that's great. Do you know how to do it? It's up on the left-hand
yes,
corner.
absolutely. Hold on.
Beautiful.
So I will share my
A,
screen.
a picture speaks a thousand words, although I know most of our community would rather look at you than charts. Why don't we take
Oh,
a
can
look
you
at
see
the
me
chart?
right now?
Huh?
Can you see me right now?
Yeah, I see you.
Oh, all right. Well, hi.
Hello, Diva. Nice to meet you. So yeah, we can. Don't worry. You look fine. So
Great.
if you could share the chart, we'd like to take a look. And you talk about the Fed. Before the Fed, a former vice chairman, Alan Bliner, came on and said he didn't think they would move, and that they would move most likely in December.
Yes.
What a strange time to move. I think Janet Yellen might be renamed the Grinch. That's still Christmas if she does it in December. You think that's likely?
Right. I don't know. So as we know, and you stated it perfectly, Janet Yellen is not a type of person who goes ahead and surprises a lot of people. And December is famous for low volatility. People are going to be on Christmas parties, on vacation, planning their vacations, they're excited. The liquidity is going to be low, and a rate hike at that time is going to create massive, massive swings in the market.
Yeah.
So even though, yes, 13 out of 17, I think, members of the Fed are stating that it is likely that we'll see a rate hike within this year, December is a little bit too odd for me, but
Mm-hmm.
you never know what they're thinking. But it's
You
just
never know.
that it will be a little bit too risky for the Fed to rate hikes in that month in specific.
Okay, so I see on your Euro chart that you use the clouds,
Yeah,
and we're trading above the clouds right now. You know, if you look at that break from 117 to 110-ish, 111, we're about 61.8 back here. How are you advising your mentees and people that work with you to approach the euro in here today?
All right, so let me actually give a little bit of a background of what happened with the euro and why it really is above the cloud right now. So back in August 24th, when the China's meltdown happened, we had a sudden market panic, and
Right.
the market was not supposed to go this high. It only went up because it was a surprise, because of last week of summer, low liquidity, and basically a market panic that was not what the pair was meant to do at the
Yeah,
time.
because all the stops were over 114 so for it to just go on a stop hunt, 115 would have been enough. So that's a good point. Low liquidity exaggerated the move.
Right. So for that matter, right now, even though I have the cloud over here, I'm not really using it as an indicator on the daily chart because I think it still has some time to recover from the panic. The indicators can be a little bit unreliable at the moment, but and I would definitely was thinking so at the time when it did break above the cloud. I was like, okay, this is not a bullish signal, and we did see that it went back below. It has still not got into the cloud. But one other thing that we can see in this, so that was the history that I wanted to say why the pair is above the cloud at the moment. That I believe is the reason. But one thing that never lies is Fibonacci retracement levels, and
Right.
the reason why I have my levels set where I have, you can see that these levels are historically very important, and it also falls very perfectly at 38%, 23% Fibonacci levels. And I believe that the market is still basically on the way range between the 38%, 23%. It does have a slight hint of a uptrend, because if you connect the higher lows, you'll see that the market is definitely moving in a range, within a range, but within a rising channel. So
Yeah, nice look. Yeah.
yeah, so is this a market reversal confirmation? For that, I have to actually go to way back, right? And see if this, in fact, historically is a confirmation. So as you can see, back in 2001, we had the lows below parity, 0.85, and this could basically be a saucer top pattern. The reason why a lot of people were considering or even predicting that parity would happen is because we already have broken below a previous very important level of 118, and
Yeah, that really shows it clearly, that 118 level. So basically, to me, it looks like we're putting in a bear flag, but and this is the correction from the 140 drop to 104. But you know, markets could correct 38 too. They could even correct 50%.
absolutely, absolutely.
So
So,
it's a tough call for me here.
so the thought is basically right now, so I'm a very long-term trader normally, but at the moment I am not. I am getting inside and out of market more within the range. Right now I'm within this range, within this channel. I'm not going to go crazy, and even though the possibility of a 50% correction, as you said, is very likely, I'm not going to bet on it because I still haven't got the solid confirmation of the market complete reversal. So
Okay,
I'm going to
what
continue.
would that line in the sand be for you?
I'm sorry?
What would that line in the sand be for you to get confirmation that this is an important bottom?
I would go a break actually above 50%. That would be my confirmation
Okay.
of a long-term reversal.
Okay. Good reference point.
Right.
Okay. All right. So you become more of a day trader, 2-3 day swing trader at
Yep.
this time.
Yep, that's what I've been doing. I got into Aussie yen trade, and I got out of it. I got into pound yen. I was actually, before this, as I mentioned to my followers, I was not going after anything dollar related in the past week, and I just mainly traded commodities and against the yen because the yen had the least surprises coming up. So that is what I did within the.
That's interesting. So you were trading commodities instead of in dollar terms and yen terms.
Yeah.
So you were trading gold and oil, etc., in yen terms. Can we see what a chart like that may look like? And
actually, no, I haven't been trading oil. I should. I never do. I probably should, and I am in the process of expanding my portfolio. I'm specifically a currency trader. But, well, yes, oil does go.
Because oil is the only commodity that did not benefit from dollar weakness yesterday. We pulled back about $3. Gold was the shining star, and silver even outperformed the gold. So you were trading the metals in yen terms?
I was trading the Aussie.
Okay, Aussie yen. So Aussie yen is a great risk-on, risk-off pair, and I thought that we might have a chance to rally back to the breakdown around the 89.90 level.
Yeah.
So what are you thinking in here?
So I was pretty bearish on Aussie as well up until recently.
Yeah.
And I actually believe, so for a few factors, I am currently bullish, and I have been in bullish trades in the past few days since September. First of all, historically, if you look at the chart of Aussie versus any other currency, right now you have to keep in mind that it's springtime, beginning of spring in Australia, and Australia is a very farming focused nation, and they not only it's spring, it's also entering the Christmas season, so the likelihood of people going out and start shopping is always higher. From
makes me want to have a Foster's.
I'm sorry?
Makes me want to open a can of Foster's.
Ah, yeah.
Talk about Aussie. So yeah, Aussie benefiting from this recovery in commodities, but what I noticed yesterday, even though Aussie has recovered, it's the currency that gave back the most intraday. It was a wild day in Aussie.
It was, but it did hit my, well, I got lucky, I guess. It did hit my limit. My limit was right over here at 87.30, and it went down, is now recovering. So, as I said, if you remain within the range, of course you're going to see swings. But by short-term trading, I'm not saying day trading, because day trading, to me, is always risky. You never know what's going to happen. We're having a very strong day at the beginning, and then it went back down and it closed below. But now it's recovering. So I recommend, if you are going to take advantage of this coming up or the current Aussie up moves, stay within your trade a little bit longer than a day. I would say at least 2 to 3, 4, or even 5, 6 days. But stay within the range. Stay in it a little bit longer.
Do you have a view that it's possible for us to take out that 82 level, little double bottom there, if the S&Ps fail and take out their, that was kind of the flash crash low in the yen and the S&Ps on the 22nd. You think we're going to revisit those levels after maybe a little bit more upside?
Hold on. Let's look at the chart, actually. That's a good question. Do you want me to continue looking at it against the yen, or?
Yeah, against the Aussie yen. You know, because Aussie yen, the yen really cratered. We had a flash crash, and Aussie yen actually revisited the low, unlike the S&Ps never got back to the low.
Right.
The yen didn't get close to the low, so the fact that Aussie yen got all the way back down to the low, to me, just a blind squirrel in the middle of a snow-covered forest on a moonless night is indicative of weakness, that it was able to retrace that much.
Well, you're basically talking about a formation of, so you're talking now, this one, a double top? Hold on.
Double bottom that we had, we retested the flash crash low.
Yeah.
Hardly any pairs retraced as much as Aussie yen.
Right,
So,
absolutely. That is a good observation.
So to me, regardless of if we have some more strength in Aussie yen, maybe back to the breakdown, 89, 90. My work tells me we're going to revisit that double bottom and take it out. That's my Noster Pinker call.
So you're not suggesting that this could have already been the double bottom? You think that there's going to be another bottom and then it goes back up?
Yeah, I'm a big believer in threes, so to me that looks incomplete for a bottom.
Right,
I'm not saying we can't rally to 88, 89, but I think eventually we could revisit that. Is that what, and according to your cloud work on this, we're way under the clouds.
Well, absolutely. So I will tell you this. I would become a believer in your strategy if the market, if Aussie does break above this neckline. Because 87.30 is an important level sentimentally. And from before as well. So for that reason, it has been trying to get above it. It hasn't been, obviously, and if it doesn't do it, I mean, by this 87.30, I obviously mean like this range. I would say, all right, let's actually create our pivot levels as we talk. This is another 86. 89, as you mentioned, as well as the other important levels. So I would probably say that these two are pivot levels. So I would look for another visit only if Aussie yen is not able to break above the pivot levels over here.
Okay, so I'm looking for your second pivot level in the next week or so to attempt shorts. And anything else that you'd like to share with the community? I know you have you have other interviews to get to in a little bit. We covered euro, we covered Aussie yen, cable. Well, let's see. You want to show the yen? Great. Okay.
I mean, we talked about Aussie yen, but I mean, another thing about Australian, something that I actually got into today. Dollar yen also has been ranging. After this fall, we saw the formation of a double top over here, right? And it broke below the neckline, and right now it has formed. Okay, let me zoom in a little bit.
I'd love to see a rally back to your cloud, 22 and a half, 23.
But I think, well, dollar yen has a crazy tendency to just range for the longest time.
Yeah, wears people out.
It's just crazy. But, I mean, again, for range traders, this can definitely be an opportunity. So I'm looking at this range right now in dollar yen. And because we saw the massive drops yesterday and today in dollar, right now, to me, this is a range trading opportunity. So I got into this one right today, like right before we talked. They're still testing it, obviously. I'm not expecting it to happen within today or even like Monday. I'm expecting this to mature next Friday.
I like it.
So I'm in a bullish position right now. It could pull back a little bit lower along the lines of this triangle, or even I don't know if it's going to go lower than this. But I do see a great possibility of this reaching the upper band of this triangle, and my target at the moment is 120.50. So this is a trade that I basically wanted to share that I got in right today. So yeah, I think my takeaway for now is range trading until the next confirmation of reversal across majority of majors and minors.
Some great looks from you today, Kiana. I'm so glad we got back together, had a return interview. Why don't you share with people that are watching us live the best way for people to follow you, possibly get involved with you. You could show your website and tell us a little bit about how you mentor people.
Absolutely. Let me see how I can actually change the screen.
And while I'm thinking about it, when you show the clouds, Kiana, besides flying and being in an airplane, the last time I can remember being above a cloud was having lunch in Big Sur. I was having lunch, and the elevation's so high. I was having lunch and looking down on the clouds. So I know it doesn't relate to the market, but that's
No,
what
I
clouds
love
make
thinking
it.
about the clouds. Okay, but
Yeah,
tell me, was it cloud number 9 or cloud number 8? Because that's very important.
I think it was cloud. I was on cloud 9 when I was
Okay.
there. Three threes, Kiana. So completion.
uh, Absolutely. So let me actually share with you where you can follow me. Well, I am the founder of investiva.com. This is the website. This is me when I'm a little bit more brushed up. And you can basically click on here, sign up for free. I send out my updates every day for free.
What a great line. No, I don't want to make money. Whoever clicks that.
Well, some people like
Who who are those philanthropists that
I
they
would
don't want to
actually
make money?
like to go back to my analytics and see who actually clicks on this one. But this is a catch, obviously. If you click on it, a video is gonna pop up, and I'm gonna explain.
I think it might be Hillary Clinton's competition. He's a socialist, so maybe he doesn't like to make money. Go ahead, Keith.
Absolutely. So yeah, I mean, if you even don't want to make money, but the fine line over here says, unless you ignore the profits you can make in the world, making the world's largest market, and count the losses in time, money, and energy due to lack of education. So that is basically the free sign over here. So
Okay.
definitely, yes, you can go ahead and sign up on that. One other thing that I'm known for is my book. If you have any listeners from in Connecticut community, I'm going to have a book signing in Barnes & Noble in Stamford downtown on October 10th.
Congratulations. Congratulations.
Yep, come over, say hi. We're going to be there from 2 to 4 on a Saturday, 10th. It's going to be a great getaway. And a little bit about me. I used to live in Japan for 7 years. I used to be on Japanese game shows, and I've made a complete fool out of myself. You can click on this and take a look at that. Have a laugh. And even though our name is Investiva, we welcome men and women.
What a surprise that you have more male students than female.
It is, isn't it?
Especially with all the great pictures and how attractive you are. I have one question from the community, and perhaps we could wrap it on it. What do you think about the Greek elections this Sunday, and what kind of effect do you think it might have on the euro?
Well, obviously we can expect volatility, but I kind of feel markets are a little bit tired of Greek news. So even though the noise is that, there's going to be huge swings, I kind of feel like it's not going to be that much of a swing over there because of, it's just been going on for so long. I'm tired of hearing of it. I don't know about you.
It's a tie between talking about the Fed and Greece now, isn't it?
I know. I was like, right now, as I was writing my article, I was like, are you excited that the anticipations are over with the Fed? Not really, because now people are going to go and talk about what the Fed is going to do. It's like the noise is always there. And
it's Groundhog Day. It's Groundhog Day. You remember that movie with Bill Murray? Maybe you're too young, but you wake up and every day it's a repeat performance.
Oh, I've heard about that. Everybody tells me I should watch that movie. I haven't. I'm definitely going to.
It was a good one. Well, you know what? You have definitely demonstrated, Kiana, why you're an investment diva. So really, I can tell that you have command of what's happening in the markets. You have a great demeanor and the right type of temperament, from what I can tell, to be a trader. It takes the heart of a lion, and I believe you have one. So thank you so much again for your time, Kiana. And
thank you so much.
Have a great, the summer ends on the equinox next week. I hope you have a great fall trading season, and look forward to you visiting with us here in LAR down the road.
Yep, absolutely. Thank you so much for having me.
All right, Kiana, have a great weekend.
You too.
Good
Fine.
hunting. Good hunting, my trading warrior sister.
Thank you.
All right, Kiana.
I know.
Thank you.
Thanks.
What a great interview.